This is educational, not trading or investment advice, okay? This is entertainment, mainly educational. Future stocks, bond trading of any kind involves substantial risk. You may lose everything you have. Before trading or investments, do your own due diligence. This is not a recommendation to go out and trade with your money, okay? If you do so, you're on your own. If you're watching or listening to this video, you are agreeing to these terms. Okay, let's get to it. Welcome and thanks for stopping by. I'm Digital Micro here on the Digital Micro Trading Journal channel, day trading for an ROI payout. It's just my trade journal market analysis, and we're in holiday trading. It's Wednesday, December 20th, 2023. We do have a news catalyst, 10 a.m. Eastern Standard, daily affirmation. I see it and understand. Rigid discipline and rules, flexible in outcome expectations, independent thinker, impeccable risk manager, precision-based trader, responsible business manager. So here we are, Nasdaq on the far left, ES middle, dollar. First thing I want to say is I'm tape reading. This is holidays, and it's the longest holiday season of the year, December. I'm just going to show up, tape read, and take notes, maybe forward test, back test, whatever journal. But the idea here is the last 3 days, note that Nasdaq all-time high for 2023 just happened prior day. Same with the middle chart. And then the dollar had a big dump here, which enabled the equity indices to go up to their another high for the week. We've had consecutive weeks, consecutive days up. I'm just going to be open. But if I were going to trade, I certainly wouldn't do anything before 10 a.m. So let's look at the annotations on the next chart. Look at the levels. Next chart. 15-minute chart. So our high here came right before the London session. So New York midnight open, 22.50. The high, 24.25, 48.24.25. So that's the level above. London open comes in 21.75. New York midnight open again 22.50, and the PM high from prior day was 48.21.50. 48.21.50. So you can see we've got real compression there, nothing really happening. And then after London opens, we dump here. Again, not a huge retracement down. This is what, 24 to 09, so what, 14, 15 handles max. I am not enticed at all, mainly because where the calendar is, we're wrapping up the year. Professionals aren't going to be basically in the market with big size trying to make the year with Hail Mary passes. They just aren't. And I don't want to slosh around with other retail traders. I'd rather just tape read and wait for the new year to happen, but keep my edge sharp by showing up, watching. So these are the levels. What do we have below it? We have prior day RTH open, prior to that 18th open, and then we got all the way back to Friday's open. So you can see each day here was consecutive new opens, and the big PD array was this volume gap, I should say, volume imbalance down here. So this is a big deal, and that's just right above the RTH open from Friday. So what that is, a weekly candle air imbalance between candle bodies of last week on the weekly basis and this week of the weekly basis. So do we go down to it by Friday? I don't know, but this to me does not look good, again, just because it's time of year. So there's time of day, time of week, and we are at time of year, hands off. So again, on a bigger time frame, let's look at the 4 hour here with this. Stretch it out a little bit. That is another look at it. Below that, way below that, is a daily fair value gap, which we really never violated. We totally respected it with the candle bodies. We had a candle wick go back down here on the 14th of last Thursday, prior week, but that's it. Those are the levels here. There's nothing significant about this structure other than just saying, look at it. It's just basically not giving up. Now, if I switch to the RTH, regular trading hours only, you see the gaps here. We really gap from that weekly volume imbalance. So this takes out all the overnight electronic trading. And I just want to show that the escape velocity, once this week's volume imbalance booked, we really left last week's Friday open and that weekly volume imbalance and just took off from 82 all the way up to the high of 4824.25. So it's significant to really get an idea of what the traders that are showing up to trade are doing here. But back to the electronic trading, again, a little different set. Now I want to go to one last chart here, and this is the Renko chart. And so why I don't have a real high expectations is just because it's not really accomplished anything other than go back down finally to the red Keltner. So we haven't really tagged it since Monday briefly, and we've just been straight on trend. And look at where the volume imbalance is on the weekly, below the lower blue Keltner. So yeah, I have low expectations for this week before the holiday. Holiday weeks generally, in my experience, rally. And it's just not a good thing to try to have a two-way market and fade for basic retracements, because it can just stay elevated for the whole holiday season. So that's why I'm not going to swim in it. That wraps it. I want to thank everybody for your views, showing up, throwing me up if you like this video. But thanks again, shout out to the original gangster subscribers and the new subscribers too. Really appreciate it. You're helping the channel immensely. And happy holidays. I'll post another video. I'm not sure when. I'm in holiday mode, but I am for sure watching the charts. Aloha and take care. Bye.